So whenever we hear the word interest-free, it's almost as if an alarm bell rings inside of us and makes us want to purchase the product or service even more. After all, if it's interest-free, then it looks like we're getting a good deal and we're essentially getting money for free. But what are some of the costs that you need to consider when companies advertise interest-free offerings? Hey guys, welcome back. My name is Fyzee. On this channel, we look at personal finance, and today we are exploring the real cost of interest-free credit cards. So as always, guys, I'm not a financial advisor. This is not financial advice. We are speaking in a very general perspective, and the reason why I'm making this video is because I've previously worked as a mortgage broker. I mentioned this in literally every video, but it's very important to provide context. And I dealt with so many customers that had interest-free credit cards. And this seemed to be quite a common thing because I dealt with customers all around Australia. And the most common thing that I saw was a Harvey Norman 60 months interest-free credit card that they had for things like furniture from Harvey Norman. Now, for those of you guys that don't know, this basically means that if you choose this option at Harvey Norman, they will give you a credit card, and the card itself will have a 60 months interest-free option where you can make equal monthly repayments for the next 5 years. So just by looking at that, it might seem like a pretty good option because instead of paying a few $1,000s up front of your hard-earned money, you can basically just spread it out over 5 years on equal repayments. And what this does for you is that this improves your cash flow by quite a lot because you have very, very tiny repayments. Now, what you do need to understand for this offer is that once you get approved, they're going to charge you a $25 establishment fee, and then each month there will be an account service fee of $5.95 per month. So let's just call it $6 to make it very easy. Now, the website states that the minimum financed amount must be $1,000, so let's use that as an example. So if you spread this amount over 60 months, your repayments will be around $17 per month if they're equal repayments. And the fees of $6 per month will mean that you are paying in total about $23 per month altogether for everything. And your fees as a percentage of your overall repayments are a massive 26%. And this does not include the establishment fee as well. So of course, guys, you probably don't want to pay $1,000 off in 5 years because that's just a more extreme example, but it is a possible outcome. So let's look at a different example. Let's say that you get $5,000 worth of furniture over 60 months interest-free. Your repayments will be about $83 per month. The fees of $6 will mean that your total cost per month is about $89. Fees as a percentage of overall cost is now 6.7% per year, which is still very high, and it doesn't include the establishment fee of $25. If we include the establishment fee in this whole equation, the cost is about 7.1% per year, which is higher than nearly all home loans, especially with rates being so low. So guys, obviously to minimize the cost, you can obviously try and pay it off quicker to make sure that you get charged the monthly fee as less as possible. But if you make more repayments, then you have less money for other stuff. So there's a bit of a trade-off there. So you can basically see that in this case, the interest-free is just clever marketing because it attracts a lot of attention, and traditionally we are conditioned to believe that we will always get charged interest on borrowings no matter what. So when products like this come out and boldly say interest-free, we obviously think that it's a no-brainer and it's a super good deal, and sometimes we might be blind to the fact that it's actually costing us quite a lot. Now, I just want to say that I'm not telling you what to do. If you want to take up this offer, that's entirely up to you. My job is just to tell you the positives and the negatives of actually going ahead with this. And all I want is for you to think that whenever you see interest-free, look at the terms and conditions and see if there's some sort of an application fee, establishment fee, monthly fee, exit fee, all of that stuff. And always make sure to read the fine print and be mindful of everything. And also with this Harvey Norman card, once the interest-free term ends, it turns into a normal credit card with an interest rate of 25.9%. And if you apply for a mortgage, this card will affect your borrowing power. And I'm speaking from experience because the clients that I dealt with had this card and they could borrow less as a result. So once you've paid your furniture off, you might want to get it cancelled off, otherwise it just stays open. Now, before we go into another example, I just want to say that if you found value so far, please like and subscribe. It really helps out with the YouTube algorithm. Now let's look at a different example. You would have heard about those interest-free cards from NAB and CBA that were rolled out recently, and they made a huge deal about how they're interest-free and how it's so innovative and whatnot and whatever. Let's just look into it. So Commbank Neo is CBA's card, and there is no interest, no late fees, and there is strong emphasis on being interest-free. As you guys can have a look, you can get 3 limits of 1K, 2K or 3K, and a simple fee of $12, $18 or $22. So let's run through a few quick examples to see how it actually affects us financially if we go with these options. If you get a limit of $1,000 and you do your normal spending of, let's say, 1K per month, and you pay everything off, and you do this for 12 months, your fees as a percentage of your overall cost is around 1.1%, which is super low. However, the cost as a percentage really starts to go up when you barely use the card. And let's say you spend only $200 per month for 12 months, your fees as a total percentage will be super high at around 5.7%. So basically what I'm saying is that if you're using this card and you're only really using, say, $200 per month or something very, very little, now although you're only borrowing a very small amount of credit from the bank, the actual cost of that credit, which comes from the annual fees, is too much. Similarly, let's say that you buy something for $100 and it takes you 4 months to pay it off. With this card, you need to make minimum repayments of at least $25 or 2%, whichever is higher. So in this case, you will pay $25 per month off your balance, plus the monthly cost of $12, which is the fee as well. So your fees as a percentage of the overall cost are a massive 32%. Now, if you pay it off all in the same month, it costs you around 10.7% of the overall cost. So while this card could be good to keep around for your emergency spending, because you don't actually pay fees on the card if you don't use it, but if you spend very little on the card, then you're actually paying more than you would on a standard credit card. In some cases at least, because normal credit cards have the annual fee plus the interest rate. Now let's look at the NAB Straight-Up Card, which is very similar. Now NAB has a lower monthly fee when compared to CBA across all credit limits, and if you don't spend on the card, you won't get charged. And once again, let's look at an example with a credit card of a limit of $3,000. So let's say you spend this $3,000 1 month and it takes you 6 months to pay it off. You will get charged a monthly fee of $20. So over 6 months, the fees as a percentage of overall cost will be around 3.8%. And if it takes you a year to pay off that $3,000, it will cost around 7.4%. Now, it's really important to note that in some cases, this card can actually work out very cheaply, but in others, you're paying a really ridiculous amount. So for you guys to apply this information in your own circumstance, think about how much you would spend each month, what you're getting the credit card for, how long do you think it'll take you to pay off everything, and then you can form a rough idea of how much it'll end up costing you overall. Now, this is going to be different for everyone, so I did a few quick examples to help you out. So that's it, guys. Hopefully now you can make proper informed decisions about using interest-free options if you need to. I'm not saying don't use them, I'm just saying that be mindful of the spending and just be conscious of where your money is going. Just because it says interest free, it doesn't mean that it's cost free, and that's very important. If you enjoyed this video, I've put a link up to a few videos on the screen like this one, which talks about the best debit card that I've used so far in Australia. So please like and subscribe, guys, and I'll see you in the next one. Bye bye. So